day, everyone. Welcome to the Daily Stock Report brought to you by QualityStocks.net, where performance is tracked daily. I'm Chris Hambright, and for Thursday, April 5th, we're bringing you the latest news from around the markets as well as the top movers to look out for today. In our headline news, the major averages held on to modest gains Wednesday as diplomatic resolution in the Middle East and some upbeat analyst commentary proved to the bulls with just enough impetus to look past more evidence of slowing economic growth. With the Dow, S&P 500, and the NASDAQ up 1% on average a day earlier, it wasn't surprising to see investors begin to question such sizable gains amid a lack of overwhelming news behind such a surprise rally. However, with a nearly 6% risk premium put into oil futures last week amid growing geopolitical tensions, the Iranian president announcing the release of 15 British sailors pushed oil prices to session lows and improved overall sentiment. Crude for May delivery was down as much as 1.7% and below $64 per barrel, but closed well off its lows since the geopolitical crisis involving Iran's capture of those 15 Brits merely became less of a crisis as Iran continues to defy UN demands to halt its uranium enrichment program. As evidenced by the NASDAQ outpacing its blue chip counterparts to the upside and logging its fifth consecutive gain, technology was the day's best performer. Microsoft, which is also NASDAQ's most influential constituent and third most heavily weighted stock on the S&P 500, was the driving force behind all three indices. The day's best performing Dow component soared 2.3% after a Citigroup analyst raised his Q3 earnings and revenue estimates due to demands for Microsoft Windows Vista. An analyst upgrade on semiconductor equipment, the day's seventh best performing S&P industry group, provided additional sector support. Healthcare and consumer staples were other bright spots in the day today, due in part to their defensive characteristics, but their modern gains struggled to offset the lack of follow-through from the likes of financials and industrials. REITs were among the day's biggest disappointments, but industrials was home to the day's worst-performing S&P industry group. Human resources plunged 9.5% after Monster Worldwide cut its Q1 revenue guidance. Telco and utilities were the day's biggest laggards, but that's understandable since both are among this year's three best performing sectors. And now for our small cap news, brought to you by Quote Media Incorporated. Quote Media is a leading data provider of financial stock, market data, market news feeds, and related financial software solutions to financial service companies, online brokerages, clearing firms, banks, and public corporations. With gourmet sodas and beverages on the rise, Reed's Incorporated announced recently that it plans to launch new diet versions of the company's Virgil root beer and cream sodas in the second quarter of 2007. The company pre-announced sales for the fourth quarter and year ended December 31st, 2006, that its sales increased 10.1% to $2.6 million from $2.3 million for the same period last year. Reed's Incorporated opens their trading day today at $3 a share. IDM Pharma Incorporated has filed a new drug application for Junovan for use in the treatment of patients with newly diagnosed retractable high-grade osteosarcoma. Osteosarcoma is a form of childhood cancer that develops in teenagers during growth spurts and accounts for 3% of all childhood cancers. The survival rate is 60 to 65% for children diagnosed with the disease. The FDA has accepted the new drug application for review. IDMI, previously at $5.25 a share, opens up today 45% at $7.63 a share. And that's our newsmakers today. Stay tuned right here for the Quality Stocks Daily for the latest news from around the world, from small cap to large cap, and everything in between, brought to you by QualityStocks.net. Thank you for tuning in. I'm Chris Hambright. Have a great day, and we'll see you tomorrow right here on the Daily Report.
You've got it.